Hey, this is Tyler Braun with the Tranel Financial Group. I'm one of the financial advisors. Hope you guys are having a great day. Thanks for taking the time to watch this video. Just wanted to take a few minutes and go over some of the questions. And really, I want to categorize it into the top three questions that I've been getting from clients. So I've been on the phone a lot, had a lot of phone calls with our great clients and just people. And there's a lot of anxiety out there. There's a lot of fear, just rightfully so, right? I mean, we're dealing with a virus, and it's causing a lot of unknown. So there's a lot of questions, and really it comes down to three questions that I've had the most. So I'm going to share my screen here with you and go over what those three questions are. So number one, people want to know what is going on, right? What is going on? What's occurring? What are the updates with it? Number two, how low will the market go? I've heard that quite often. How low is it going to go? Where's the bottom? When's it going to occur? And then three, what do we do? And each of those need to be treated independently. So let's start with question one, with what is going on. So right now, right, the markets have reacted very negatively in the past month. Now we've seen a little bump here as of late, but really we've seen a huge amount of volatility since mid-February, when the markets were previously at their all-time high. It's the coronavirus has caused a pandemic across the world. The coronavirus, they're dating back to Wuhan, China, where they started quarantining people, and it's basically similar to pneumonia, where it has an impact on the lungs, highly contagious, and it's really shut down supply chains worldwide. And it's really now to a point in the United States and across the world where we're quarantining different individuals. We're putting different state by state rules in place where they're suggesting that you stay home to keep your family safe. We're actually in the process of going through that right now, as I'm doing this from my basement office in my home to practice social distancing. So as a whole, what's occurred with the economy is just the fear of everything shutting down. Right? If people are quarantined and they're not able to get out and purchase goods, that impacts not only companies, but the suppliers of those companies and so forth. It's a trickle-down effect. So approximately 70% of the U.S. economy is driven by consumer spending. Well, think about that. If 70% of the world's largest economy is driven by consumer spending, and the majority of our country and the world is quarantined or in isolation in their home, they're not out buying those products. So it's very difficult to go purchase a car when you can't leave your home to go to that car lot to purchase that good, right? So the economy was operating very, very strong previous to this, and now we have this complete unforeseen slamming of the door to the supply chain, and the end user is not, when I say the end user, that retail public is not able to get out there and actually spend that money and purchase those goods. One of the questions we've seen off of that is, what about retailers, right? Online retailers. Yes, we've seen online shopping and so forth really pick up over the years, and as of late, it's driven even further. But there's announcements such as Amazon even closing down non-essential products because they don't have the people available right now to deliver all these products to the people that actually need the essential goods, right? Your food, your groceries, your toiletries, etc. Right? So that's really what's caused this volatility. We had our all-time high back on February, I believe, 19th, where the Dow was up over 29,000. And we've dipped quite a bit from there, and we've had a nice bounce back on the last few days. But ultimately, right, we're still in that period of volatility, mainly driven by the unknown of how this will impact the overall economy. Question two, let's talk about that. So the second question that I'm getting a lot from clients is, how low will it go? And what they're referring to is, how low will the market go, right? We were as high as over 29,000 in the Dow about a month ago. We've seen quite a pullback. How low will it go? And I don't have a crystal ball behind that. So I wish I did, right? But I don't have a crystal ball that says the market is going to hit the bottom on this day at this time. Really what we need to do is break that down into two different segments. If you're a person, for example, that is looking to get into the market, right? What you're doing is being opportunistic and saying the market was at something substantially higher a month ago, And now it's given me even more purchasing power that he didn't have before. So it's breaking down and addressing company by company. So let's just use some examples. Let's say ABC company was trading at $100 per share in February, right? And the economy was strong and the company's numbers were strong, and they're making a product that you're going to buy 3 years, 5 years, 10 years from now in the future. And now with the market pulling back, right, that same company might be trading at $60 or $65 per share. So what it allows you to do is add that same contribution, but purchase even more shares and take part in even more of the upside or the growth. So whether or not that company's price dips another 5% before it goes up by 20%, really at the end of the day, that doesn't make a huge difference in the long run. What you're doing is you're purchasing a good, solid company at a discounted price compared to where it was even a month ago. So it gives you that good buying opportunity for those of you that haven't been in the market. For those of you that have been holding on, meaning that you were invested and have been invested for a long period of time, and now we're seeing the market pull back, really that's a conversation. The conversation behind how low will it go comes out of just uncertainty. And really, let's look at that uncertainty a step further. So when we are looking at the market, and this is the Dow since inception. So this is the Dow dating back, 20 plus years. There's been plenty of times where we've seen big dips in the market, right? And the most recent one previous to this was 2007, 2008, that weighs heavily on people's minds. And when we look at that and we look at the way that the Dow is situated and the volatility that occurs with it, you're never going to be able to time the market perfectly. But if you let your emotions take over and sell good, solid companies that you're going to need their products from in the future, it allows you to not take part in the upside. So what you're doing by saying, you know what, I don't know how long I can hold on. The volatility and uncertainty is causing me to lose sleep. I know, and it's scary. But we have to remove the emotions. We have to take a step back and say, I'm in good, solid companies, and I've laid out a good, solid foundation and plan going forward, and know that there will be a point where we'll see that turnaround, and you want to hold it for the long term, and that's where you're going to see the gains from the portfolio. So I don't know how low it will go, but ultimately we need to stay long-term with our objective. For those of you that have not been able to get into the market or haven't gotten into the market, now is a great buying opportunity just with prices coming down. And for those of you that have been in long-term, stay in those good, solid companies, right? Because we know we're going to need those products 3, 5, 10 years in the future. Stay long-term. Don't try and time the market. Third question that we get, right? Now bring that screen share back up here. The third question that we're seeing is just, what do we do? And that's a conversation of, what do we do now that we're here, and what do we do going forward? So we do not want to react to the situation. And that's a common conversation that I'm having with clients is when they're calling up saying, well, what do we do? We don't want to react to what's happened. We want to be proactive with our approach and realign ourselves or stay aligned with our current plan to achieve our long-term goals. So for certain individuals, this is an opportunity where we realign things, make some adjustments to take advantage of their plan or different situations for them going forward. For others, it's just being proactive and revisiting their current financial plan, saying this is where we're situated. Life has its ups and downs, and I get there's going to be things thrown at us that we have no control over. How are we insulated for that? And what do we need to adjust or change to be proactive going forward to make sure that you're completely situated the way that you need to be for your financial plan? So it's not reacting to the situation, but actually taking a different mindset and a different approach and being proactive to the situation, saying, how do we need to adjust to take advantage of the future as things start to come back up and they do get better? So if you guys have any questions, please reach out to us, shoot us an email, give us a call at the Tranel Financial Group. We're here all the time. We're glad to help you. I appreciate you guys taking the time to listen to this video. If you have any questions, like I said, please reach out. Hope you have a great day. Stay safe, and we'll talk to you real soon.